You got me running, got me running. Raise your hands up. Raise them up.
Okay, welcome everybody to the Forex Trading Asia Daily Currency Call, episode 283. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay, so in a moment later at 12:30 p.m. GMT plus 8 Singapore time, there will be the RBA rate statement and cash rate. It will be released. So right now we have Kim Hong, currency analyst at LCMS Traders, to share a little bit about what to expect from that. Kim Hong.
All right, greetings everybody. Yes, GMT 12:30 later on, GMT plus 8. We will be hearing from the Reserve Bank of Australia on their monetary policy decision. Okay, so the RBA is expected to hold interest rate unchanged at 0.1%. Okay, and they are going to keep quantitative easing. They're going to maintain their quantitative easing plan with no changes because they have just recently launched the second round of the $100 billion government bond purchase program last month. So, you know, they're not going to change. They're not going to make any changes as of right now. All right. So boring stuff aside, what can we expect from this meeting? Okay. First thing, so the first thing is, will the RBA actually make any amendments to the third round of quantitative easing, which is expected to be in late August or early September? Okay. So recently we have seen the Australian economic data to be quite well. Okay, jobs has been adding into the Australian market. Unemployment rate continues to decline. Consumer spending continues to rise. Okay, business activities continue to expand. However, okay, inflation for Q1 has failed to meet expectation. Okay, so the market itself has actually expected inflation to be 0.9% for Q1, but it turns out to be 0.6%. Okay, so it falls short of expectation. Now, with this falling short of expectation, will the RBA actually, increase the quantitative easing for the upcoming third round in August, September, or will they actually, like what Jin said yesterday, maintain, and it may be good for the Australian dollar? Okay, so this is one of the key points that we should be paying attention to. Now, the second point that we should be paying attention to, okay, on Friday at 0930 GMT plus 8, the central bank will actually be releasing their quarterly monetary policy statement. Okay, now that includes the central bank's economic forecast for Australia. So we will be interested to know whether the central bank has actually made any amendments to the forecast of the Australian economy. Okay, now if let's say the central bank actually revised its forecast upwards, okay, so perhaps expecting growth to expand in 2021, inflation to increase in 2021, then we may actually be seeing a strengthening in the Australian dollar. Okay. Now, on the other hand, if the central bank actually revised downwards, okay, its forecast, then, well, we may be seeing a weakening in the Australian dollar. So I would say these 2 points will be the most important takeoff for now. Okay, so that's all I have today. Join us in the currency call tomorrow to to receive updates on what happened later on at 12:30. Okay, back to you, Jinwei.
Okay, thank you, Kim Hong, for the comprehensive analysis and the two takeaways for this RBA rate statement. Okay, right now let's get Scott Andrews from Forex Briefcase Australia to share his outlook on the dollar index. Scott.
All right. Hi, everyone. And thanks for joining us again as well. So look, US index, we did see the index move lower as well. So on the back of really what's going on here, if we just have a look at, recent data releases, we did have the ISM manufacturing index. It decreased to 60.7 from last month at 64.7. But if we really sort of look into what's going on behind the scenes, it was, linked to a decrease in supply chain issues as well. So as in there was a decreased supply due to constraints. So that's really what's going on here. So it's very much a minor move downwards. But, there could be some opportunities here to go long. Now, in regards to, data and things like that, it's really important to pay attention to that and what's going on. Obviously, there was a short-term selling opportunity here. I wasn't around for that, but again, it really does look like things are moving along quite strongly in the US economy as well. So it's important to pay attention to that. We have seen it come down from, recent highs last month as well. And there was in regards to a lot of things going on with inflation fears, but it does look like, with vaccinations, they've done over 100 million now in the population. Although I did read into the fact that it was only, a lot of people got only one jab. So, they've got to sort of get that sorted out, it looks like. But, with the US dollar, and I've talked about, there's always some intraday opportunities to be had, but we really need to be mindful of the situation over there. And it looks like things are, moving along pretty strongly in the US. So we'll see what happens, as we get later into the year. But I do see where we're currently trading at, it's not an opportunity. I'd like it to come back down again to around 90.80. And then we've got a bit of a better risk to reward opportunity to get in as well. So, currently we're just observing, but we have that long bias in the back of our head and we've got a plan. So that's how I would approach things there. But yeah, those are my thoughts so far for today.
Okay, thanks for that, Scott. Okay, so right now we'll jump into the currency in focus. So the currency in focus today is the euro. So today we are with Jin Dao Tai, founder of LCMS Traders, a multi-million-dollar trader, trading an account with more than US $14 million on a daily basis. Okay, yeah, so Jin, pass the time to you now for the currency in focus.
All right, good morning, everyone. So, looking again back to the euro dollar now, we have seen quite a bit of movement on the euro dollar. Just giving you that brief look here. This is the euro dollar on the H4 time frame. Started the week lower than the 1.2053 support level. Yesterday, it came back up to retest that point. Initially, I did think that it could have broken past that 1.2053 level and possibly gone higher. But with that rejection now looking like it's turning back down, there could be several reasons why we probably see that track lower at this point or from this point onwards. So why did I come to that idea is that looking at the economic calendar here on Forex Trading Asia, yesterday being Monday, we saw a lot of Euro news, individual country PMI numbers coming out. Although, take note here, although there are red numbers being that they're worse than expected, but PMI numbers across the board were still in that massive expansionary phase. The Italian manufacturing PMI was 59.8, expected at 61, came out at 60.7. Still a very good number despite being less than expected. French manufacturing PMI was 59.2. There was a revised number, came out at 58.9. Still expansionary again, still looking like a good number. Manufacturing for the German PMI was 66.4, came out at 66.2. You can still see, again, as I repeat, in the expansionary phase. In the overall, so remember when we look at the Eurozone numbers, don't look at individual countries. They do play a part, but the more important criteria will be the Eurozone as a whole. Manufacturing PMI there was 63.3, expected to stay the same, but it came out at 62.9, still again in that expansionary phase. So that's why we saw that upward move in the euro dollar before that retrace back down. You know, we saw some US dollar strength, as Scott was saying, some US dollar strength being rebounded. I feel that it might continue on a little bit more. US dollar probably cannot stay too weak for too long a period of time. So I think maybe in the short to possibly medium term, we're going to see some recovery in the US dollar from, you know, even from the data here. Very good manufacturing employment numbers, and also the US manufacturing PMI numbers well into the expansionary phase of 60.7. So from this point onwards, why do I think that the euro dollar might track a little bit lower? Is you can see that we don't have a lot of news coming out for today on the euro dollar. On Wednesday, we do have services PMI coming out, same like what we possibly saw this or yesterday for manufacturing PMI. Services PMI possibly going to be relatively good, but you can see that they're more cutting into that expansionary phase rather than being well into that expansionary phase. So we're looking at numbers of about 50 or just over 50 rather than being into that 60 number. So still, this might hit Eurozone services PMI number might be about 51, or it might have a slight miss as well. So I'm looking at the way the charts are playing out, looking at the way the numbers are, we might expect or might anticipate some sort of a miss on the services PMI number from the Eurozone. And then after that, the focus shifts over to the US with ADP non-farm looking like a very good number there. So expect some US dollar strength. Services PMI possibly going to be good. Non-manufacturing PMI, if it goes from 63.7 to 64.3, we're going to see a very good non-manufacturing PMI here for the US. All right, and then after that, not a lot of other news, followed by non-farm Friday that we spoke about, and I'll tell you more about on Friday again. So you can see, based on this quick review of the economic news to be released, we only have the Euro services PMI to be released on Wednesday. And with that, you know, it's right on the borderline case. We might miss it. We might almost miss that expansionary phase number. And then after that, the focus comes into the US dollar with very good employment numbers expected. Hence, you know, expecting the euro dollar to possibly track lower off this 1.2053 now support level, possibly down towards that 1.1920 support level. So what to do here in terms of a trade? You could be looking for a trade right now. I would say if you're a bit adventurous, about 1.2033, 30 pip, 40 pip stop loss for a very good 100 pip take profit. That could be a slightly riskier trade. You know, if you want to be a bit more conservative, then wait for it to break past yesterday's low at 1.2015. You would have a 50 pip stop loss for a 80 pip take profit level. Not quite 1:2, but that would be a lot safer once it breaks past yesterday's low point. So relatively straightforward here on the euro dollar. But we spoke about the euro pound yesterday evening during one of the sessions. Euro pound right now is sitting in that massive consolidation almost for a week now already, all right, or slightly more than a week now, in a very tight range. It tried to go a bit lower to test 8651. Looks like it's going to rebound back into this range. In this case, for the euro pound, we anticipate that euro dollar might be dropping. With that, if it's because of US dollar strength, then the pound dollar is possibly going to drop lower, which would, if euro dollar drops, pound dollar drops, it's going to put the euro pound back into that consolidation, back into that tight range again. So at this point, very tight, narrow range here. Wait for it to break out, possibly towards the upside for that trade back towards 8797. But at this point, nothing much else to do for the euro pound.
All right, thanks for that, Jin. Yeah, so as you mentioned, I understand that there was a webinar session in the LCMS Traders yesterday night. So let me get Daniel in here right now to share a little bit about that, the group coaching session that happened yesterday night, and possibly some key takeaways from there. Daniel.
Yeah, Jinwei, exactly. We had the group coaching sessions just last night. Now, while Jin was talking, Jin actually went through the group coaching. He actually talked about his trading psychology and how it helped in his trading to be profitable and consistent. And then he also showed how members can apply it to themselves too, to be similar, to be profitable and confident. So, for example, he did talk about not always expecting to win on every trade, but be willing to take some risk, knowing that you're right most of the time, and then how it can continue, where you continue to do this so repeatedly, you can build your confidence in your trading. Now, he also refined the way we analyze the market, learn to identify trade opportunities, and also minimize the potential risk in the market. So really, this is a brief insight of what's installed on the 7th of May masterclass. So in the masterclass here, what we will be talking about, excuse me, okay. What we will be talking about is that how we help the students achieve mastery by focusing on executing the strategy the right way towards profitability and consistency. Now, we will also be sharing how we analyze to be faster, like just how Jin yesterday analyzed his trade better and more efficient to prepare and to predict the market. Now, not only this one, you can see what we'll be talking about is we'll establish well-defined goals, break down into parts, double down and practice the right way. Now you know the 5 steps, but you will know how to practice the right way and trade the right way. And not only that, you will receive from a master. Now, what will be done is that not only that, for live participants at the event in Singapore, you will be getting a one-to-one with Jin, right? He will deep dive into trading issues that you have, what's holding you back from having your next breakthrough, follow up with developing a plan specifically for you to take your trading to the next level. Now, as this event is really limited to 40 seats, we have already broken past less than 10 seats now available. So if you want to sign up, just secure your slots right now. Now, for those overseas, don't despair. You can join too. You can join the live screening sessions of the Zoom and participate the same activity as the live participants. A dedicated coach will be with you throughout the Zoom sessions to answer your questions and facilitate the training and activities as well. Now, all these here is our attractive price for only $100. It's really $100. We usually, this kind of master course, we would charge about $1,899. Right now, we are giving it at $100. So just go ahead and join now. And this is where you can really improve and bring yourself to the next level in your trading to be profitable. Okay, yeah, Jinwei.
Okay, thank you for that, Daniel. I've pasted up the link for the masterclass in the chat, so to check that out. And we have come to the end of the session today, a quick session today. We will see you guys tomorrow, Wednesday, for the pound analysis. Thank you for your time and goodbye.